Welcome to Pro Webcast News, where we bring you daily industry updates. Today is Wednesday, July 8th, and you're watching the Afternoon Update with Paul Wilson. Today's news is sponsored by Covenant Reliance Producers. We build success stories. For more information, please visit www.crproducers.com. Now for today's headlines. U.S. mortgage applications recovered from 7-month lows last week, while average 30-year borrowing rates remained stable, according to the Mortgage Association. The total loan applications index climbed to 493.1 for the week ended July 3rd, a rise of a seasonally adjusted 10.9%. The jump came after the index reached its lowest level since November during the previous week. Meanwhile, the association's seasonally adjusted refinancing index climbed 15.2% last week to 1,707.7, after falling 30% the previous week. Additionally, purchase applications rose 6.7% for the week to 285.6. Finally, the average 30-year mortgage rate remained at 5.34 last week, up from the record low of 4.61% in March, but far below the mark of 7.04% reached 1 year ago. In economic news, the worldwide economy is beginning to recover from recession, although a full recovery will take some time and require continued support from governments and agencies, according to the International Monetary Fund, or IMF. As part of an update to its worldwide economic outlook, the IMF said the global economy is expected to contract 1.4% this year, slightly more than the April prediction of a 1.3% decline. The good news is that the IMF now predicts that the economy will grow 2.5% next year, beating April's prediction of 1.9%. According to the IMF, quote, "Financial conditions have improved more than expected, owing mainly to public intervention, and recent data suggests that the rate of decline in economic activity is moderating, although to varying degrees among regions," unquote. The U.S. economy is expected to contract 2.6% this year, with growth of 0.8% anticipated next year. Finally, the IMF noted that policies should continue to support economic growth, adding that when possible, the central bank should continue to consider cutting interest rates further and keep them low until a sustained recovery is achieved. In insurance and P&C news, the U.S. reinsurance segment posted better results than both the domestic property and casualty industry segments last year, according to National Underwriters' annual review of financial results. Although the reinsurance segment suffered a 70% drop in net income and a 12% surplus decline last year, it was still able to report an underwriting profit and a combined overall ratio of 100.7. The aggregate combined ratio was 100.1 in 2008 for the top 25 reinsurers, when ranked by reinsurance premiums assumed from non-affiliated companies. Overall, the P&C industry posted a combined ratio of 105.1, while net income decreased 96% and surplus fell 12%. I'm Paul Wilson, and thanks for watching Pro Webcast News. For more in-depth news and features, visit producersweb.com.